Thomas, please join me on the panel. And I'd like to invite to join us up here Tilman Fechter. Tilman, please join us. Tilman Fechter is Head of Strategy for Clearstream's Fund Services segments here in Frankfurt. Previously, Tilman managed the securities lending, collateral management, and banking services at Clearstream, served for 11 years as Global Head of Sales and Relationship Management for the Investment Fund Service Department, and held board memberships for several Clearstream entities. And I'd like to bring Jiří Król to join us as well. Jiří Król is a Deputy CEO and Global Head of Government Affairs at AIMA, the Alternative Investment Management Association based in London. Jiří joined AIMA in April 2010 and is Deputy CEO and Global Head of Government Affairs. Prior to joining AIMA, he worked at the Czech Securities Market Regulator and the Czech Ministry of Finance, where he led the financial services work during this first Czech presidency of the European Council. Jiří also spent several years at the European Commission working on negotiation of the Markets in Financial Instruments Directive, MiFID, implementing measures and coordinating the Commission's policy towards the Financial Stability Board and the G20 back then. Thank you so much, gentlemen, for joining me on this fine panel. And I hope you, Tilman, and Jiří could briefly reflect on Thomas's presentation. Tilman, anything you want to add from your perspective, please?
I had the privilege.
Oh, yeah, sorry. If you could have a microphone,
sorry,
please.
I've got.
Oh, yeah, you do have one. Sorry.
I had the privilege because I was, and thanks for inviting me. I'm an expert in the international markets, looking at private equity investments and know how the investors around the world are investing and what is the demand, and kind of this private investors also trying to now get into private equities. And 2 days ago I asked, what are we going to discuss on the panel? And I had a preview on the presentation. And everything which Thomas said is absolutely spot on. Right now the question is, what do we do, right? How, and you're obviously lobbying, right, in Berlin, right? But how to make it happen, right? Because he's right in saying we need to somehow make sure the investments come into German infrastructure. I'm sure there's a need. And if you look at what is investors, so if an institutional investors are investing, it's completely different than private individuals investing directly, right? And there are just two basic things they are looking at, right? Next to credibility and green, and they want to do it, right? But there's performance, right? And then tax, right? So if a performance is good, right, but I'm getting taxed heavily and then taxed twice, right? I might not invest, right? But there's easy ways how to solve it, right? So the German government, the politicians have at least the ability to change that, right? If they want net money inflow in the infrastructure, it's simple, right? Make it easy for asset managers. Simple, right? You have got a lot of work to do, right? But make it easy for the asset managers, and make it easy for the investors, right? Make it like a real estate fund, 70% tax exempted, right? Already has privileges. Just say if 70% or plus is invested in German infrastructure products, you get 100% tax exemption, right? This is an incentive for private investors, right? But I think, as Thomas said, it's the start, right? Until now, it was not needed, right? It was cheap. Cheap money was around, right? Now it gets a bit more expensive, and now all of these vehicles needs to take off. I'll keep it at that level before.
Would you like to pass on to Jiří? Jiří, if I may put the same question to you, if you could briefly reflect on Thomas's views and worries and forecast and outlooks. And you are wonderfully positioned, having been from Czech Republic, then Brussels, and now London. Is there too much money going to Scottish wind farms instead of German?
Not enough. It is a global problem. I think the tax issue you highlighted, 100% supportive of your stance. However, I think it's going to be a difficult conversation because it's always immediately, and we've had those kinds of conversations and continue to do that because, for example, in the UK investment manager exemption regime is not comprehensive, right? So right now we're trying to add new assets to that regime, digital assets being the latest. And that conversation is politically tough, right? Even a regime that's already there and you're trying to tweak it, there's still always a lot of apprehensions among politicians. It's like, what are you doing here? You're providing tax exemptions for who? For these private equity people? For these hedge fund managers? This is a non-starter, even oftentimes for center-right governments around the world, right? So you got definitely a long journey ahead of you, and we will be there supporting you from the sidelines. But the other big problem, I think, that other than the willingness or unwillingness, is really the regulatory environment around infrastructure, and having some form of a political consensus that regulatory environment, whether it is regulating electricity generation, whether it is around water or transport infrastructure, that it remains stable, right? Because these things are multi-decade projects, and not only do you need to generate those projects, and there's a lack of capacity for a lot of governments to try to think about how do we do that in the first instance, because they're just using procurement, and then off you go, you build it, we pay for it. So how do you structure that? There almost needs to be technical assistance for a lot of the governments, and a lot of learning about what works and what doesn't work, because the famous PPP projects that were touted for years and years and years never quite really took off in many jurisdictions. And then that sort of regulatory environment that provides you stability. It just cannot be a single governmental push that gets unraveled after the next election, because then it's a disaster and nobody will want to work with the governments again and provide long-term finance. Yeah. So it's going to be a fairly complex conversation, I think. Yeah. But I agree that there is a recognition that governments can't do it all alone, and it's not going to be just putting an ESG wrapper on a fund that's going to attract investment, right? That's been also a lot of sort of confusion in the past. So there's a lot of action needed on the policy front, and the difficulty is that regulatory stability isn't something you can do easily across the board, because different infrastructure sectors require different policy decisions. So we have to, as asset managers, also start thinking about and getting acquainted with the issues within the different silos of infrastructure, so that we can propose, how do we deal with housing, right? In the UK, huge problem. How do we transform the model of housing construction and housing provision in the UK? Is it going to be a model that's still developer-led, or is it going to be asset manager-led, and are we going to rely more on rents as opposed to ownership? If yes, how do we communicate that, and how do we work? Completely different from transport, water, and whatever. So I think, as an asset management industry, we ourselves have to work a little bit more to become experts at some of these issues that we haven't been thinking about.
Thank you. Keep it. Thomas, would you like to respond to what Jiří and Mr. Fechter said? Do you have any follow-up comments?
Of course, he is right. We need a change of the regulatory approach to infrastructure investments. I give you an example, a huge contradiction that is focusing more on the retail sector. This was an institutional issue. Life insurance companies and pension funds that want to invest in infrastructure to diversify their portfolios, to get yield above interest rates of T-bonds and Bundesanleihen. So that's where this presentation comes from. But then you have a lot of retail investors who have got retail funds and so on. And there is a huge contradiction on the regulatory side. Regulators, in particular central banks, are considering tangible assets, illiquid assets, as dangerous for retail investors. There are tons of rules preventing retail investors from investing in tangible assets because they are illiquid. Because in case of a crisis, in case of a run, they can sell it. And that's the worst thing in the minds of central banks. So retail investors don't touch it. That's something for institutionals, but not for you. So that's why we have this kind of discrimination of infrastructure, real estate, etc., in many, many rules all across the board. At the same time, the same regulators, for instance, the EU Commission, are inventing, designing products like the LTIF. You might have heard LTIF, European Long-Term Investment Fund. The idea of the LTIF was, we have a financing problem, we have an infrastructure problem in Europe. All these rotten bridges, etc. We need money for refurbishing this. At the same time, we have a pension problem. There is not enough pension money for retail investors. The retailers don't have enough pensions. So why don't we have European retail investors investing in European infrastructure and at the same time get decent returns for their pensions? Perfect idea. Sounds like a win-win. Well, but then the old problem was popping up. Oh, dangerous, dangerous. So it became totally over-regulated. And that's the reason why in this terrific idea, only 0.001 of the European assets under management are invested in LTIFs. So the LTIF didn't fly at all. Over-regulated because they wanted to protect them. Oh, you don't have to, you are only allowed to invest maximum 10% of your financial assets in an LTIF. That's a nice story if you go to a bank advisor and the bank advisor is going to ask you, but what's your financial assets? I don't know, I've got to ask my wife. Then the guy and his wife are spending the entire weekend in summing up what kind of financial assets they have. Then they go back to the bank advisor and tell him, listen, I have at least as much money with another bank than with you. Good luck. I mean, that's the kind of conversations you definitely don't want to have with your client. And that's why it didn't fly. So Jiří is right in saying the regulatory approach against infrastructure and, of course, infrastructure asset managers has to change.
Thank you.
Maybe just
yes, I saw you just scribbling away and taking lots very intensely.
No, just because on an international level we see a big shift from, I wouldn't call it retail investors, but mass affluent, high net worth individual investors, right, with this high demand to also invest into these illiquid private equity, KKR funds around the world, right? And there are a lot of providers now emerging the last 2 years, making it easier for these investors. They call it the democratization of the retail investors to not, only give pension and insurance and big sovereign wealths the chance to invest into private equity, private markets. There's a big shift, right? Around the world, wherever we go, right, we see there's a need and we see providers doing it, right? I think that the LTIF per se has the ability to be the European vehicle, right? If it wouldn't be an over-regulated, very complex
They did this reform that is already in place, and tons of asset managers are really working on it now.
Exactly.
I'm really optimistic that that's going to kickstart, and
this is my point.
It's the second chance for the LTIF, and I'm confident.
Okay, good. Because I wanted to make the point that when going around, I then went back half a year ago or 9 months, and I checked because there's a big hype on LTIF. There's a political will, right? Yeah, there's a reform, and it kicks in next year. So the first thing is, if you want to back test it, you go to the asset managers and the depot bank, and you ask them how you're preparing for it, right? 9 months ago, there was nothing, right? No one, right? No one ever prepared for it, right? My recent research, like 2-3 months ago, right, there was some activity, right? So everyone I asked, right, yes, we are setting up vehicles. Yes, we are trying to set them up, long-only vehicles, right? So fully funded, right? So I do believe that there's another push in LTIFs. It gets another chance, and it is potentially a good vehicle, a good wrapper to invest into European infrastructure. That's our belief.
They redid it at a price. And the price is, it's not what it was supposed to be, an infrastructure product, because it's kind of a fund of fund. you can invest in UCITS. You can invest way more than half of the fund in UCITS, like a fund of fund. So the real illiquid chunk is getting pretty small. But at the same time, this is of course the opportunity to launch it, and that's why everybody's going to launch it. And then from an asset manager's perspective, there is a huge benefit in this new LTIF, because an AIF for retail investors, like an open-ended property fund, is not allowed to be sold cross-border, which means that you cannot sell a German property fund to a French client. You can sell an institutional fund to a French client because it's institutional, but not to a retail investor. The LTIF has the so-called European passport. So this is a wrapper with you can do cross-border business, and you could put some property, real estate, private infrastructure in, and the liquidity issue is more or less solved by filling the rest up with UCITS funds. Good plan. It's not what it was supposed to be. It's still called LTIF. It's a good product. It's a nice thing. I think I'm very optimistic. I'm absolutely with you. But they totally changed the concept. That is part of the truth, yeah. But it's good it happened.
Jiří, you wanted to comment as well?
Yeah, I mean, you guys are stealing the thunder from my presentation in the afternoon. But let's delve into it then.
You want to talk about LTIFs?
So we were very close to the LTIF reforms. We started it actually in the United States by reforming this vehicle called the Business Development Company. So that's the sort of the precursor of LTIF, if you will. It was started in the 80s and never took off. Just like the original LTIF, it was a backwater. I mean, the largest fund maybe had a couple of $100 million managed by unknown managers. And the large managers of private markets funds got into this space and said, we want to run it and we want to reform it. So what happened is we managed to modernize it, and we managed to make it more flexible for the asset managers. And then since the discussion of reforms, the LTIF, the BDCs went from 50 billion of assets under management to today 300 billion under less than a decade, and it's pure retail money, right? So I think the LTIF reforms have tremendous, because it's going to be the same asset managers, right? And I think the fear, hopefully, of the regulators will be mitigated by the fact that, again, we're talking about global brands offering now not just an overflow product, but really, and here I would say, you know, the fund of funds may not be such a bad thing.
No,
because
it's not.
It allows you to actually get into the principle.
I didn't intend to say it's a bad thing. I said it's a different thing.
It is a different thing.
It's not what it was supposed to be.
And I agree that there is more of an ability to have a sort of a semi-liquid product. But from, again, what we hear from people is that they will probably not offer a fully or semi-liquid product. They will go for the full illiquid. And there may be much more limited, you know, liquidity for the investor as a result, but they want that sort of full-blooded private markets product as opposed to, oh, let's put, you know, half the portfolio in loans and the other in bonds, right? Because, again, it's a drag on returns. And I think they are confident enough that the investors will understand, which is another thing that the regulators, I think, have a hard time comprehending, is that the retail investor is just not that stupid and not that inexperienced, right? They can actually understand these products, and they can actually go along with something which may be less liquid and more sophisticated.
Yeah, retail investors are sometimes underestimated.
Yeah, sorry to interrupt. We have another, I know Thomas needs to leave sharp at 12:15. We have another 10 minutes. May I open the floor to questions? And Dominic, may I surprise you to bring you in briefly? Dominic's so well connected in Berlin. He gave a presentation this morning. Dominic, what's the likelihood, if one could give him a microphone, please, if you're happy to comment briefly on what's the chances of Thomas Richter's initiative to engage with Berlin to potentially achieve the aim of no tax for asset management, to make the dream come true?
Avoid double taxation. Let's call it this way.
Pardon me, sorry?
Avoid double taxation.
Avoid double taxation. Would you be able to comment on this? I know it's not your expertise, but you might have a view.
Yes, thank you. I think Thomas makes it clear that the next 6 months are important for him, and I'm optimistic in one point because the Ministry of Finance is from the Liberal Party, and the pressure is so high for the moment because make it clear. And the pressure is that we have investments in Germany, and still our Green Minister of Economics, Mr. Habeck, understands as well. So I'm, in this point, optimistic, but I know how critical the voices are against you, especially against all your activities in general, because nobody understands what you're doing. The key element, what we debate, if Thomas goes to the German politicians, I think 15 people in the German system understands what he's doing.
Yeah.
Not more. And this is the most important difficulties what we have. And so to educate people like Thomas doing this. So especially in the parliament, I think 5, not more.
Well, we have the second biggest parliament in the world after, is it China or North Korea? I don't remember. It's huge, but in fact, the number of experts are obviously limited, sure.
Would you have any questions, Dominic, as well? Thank you so much for your comment. Otherwise, anyone else on the floor who wants to engage? Can we pass on to Oscar, please? Oscar, introduce yourself, please, and your affiliation.
Oscar Perez, partner from Qualitas Energy, renewable energy investment manager. So one question to Thomas specific, because not knowing the exact details on the German jurisdiction, but the tradition of retail money investing through closed-end funds in renewable energy and so on, maybe you are thinking also on some kind of local specific vehicle similar to the VCTs in the UK, so that gives some pension-like schemes to retail is something that Germany may be thinking on?
Well, there is a kind of thriving closed-end fund business in Germany, but this is different from what we really need in terms of institutional money going into infrastructure products. Why is that? So the typical closed-end fund in Germany is investing in one office building or in one in the past it was a container ship, or it was a shopping center, stuff like this. And so, and you're packaging it, it's closed-ended for 10 years or maybe 15 years, and it's been offered to retail investors. That is a different story. This is the big money from institutional investors from all over the world going into institutional products. Co-investments with other institutional investors in other countries. So an institutional investor from the United States would not invest in a closed-end retail fund. Of course not. But he would invest together with German life insurance companies in kind of infrastructure product in northern Germany. And that's why the closed-end fund wouldn't be able to do the job. And that's why we need this tax thing to be able to use Luxembourg-based wrappers by German asset managers.
Thank you very much.
Thank you. If you would mind pass on the microphone, please, to the gentleman to your left. Thank you.
One question.
Could you reintroduce yourself, please, and your affiliation?
Again?
There's some speakers who have not met you yet.
Sorry.
Thank you.
My name is Serkan Nozokin, FINMA and Bundeswirtschaftsrat. And I got a question. What do you think about the critical opening for Chinese investment in infrastructure, in European infrastructure? And that was the abilities, the basic for this was opened from Angela Merkel in last year in the EU leadership in that year, maybe 3 or 4 years ago. And she said, okay, Chinese investors can invest in German, especially in German or new EU infrastructure. What do you think about it? Is this critical? It's maybe a half political question and half or not. Or it's okay?
I would put it this way: it's a totally political question, because these Chinese investments are direct investments. It is not intermediated by asset managers, so it's direct investment by the Chinese government, basically, or by Chinese companies under control of the Chinese government, and it's direct investment in a harbor somewhere in the EU, so it's a purely political thing.
But what do you think about it? It's critical or not?
Jiří,
I mean, I have a fairly straightforward thinking around that. I'd say, think about Nord Stream 2 and what you had to do to unwind all of that. You know, Dominic's presentation was clear, Germany between China and the US, but in the end, despite the number of transatlanticists being so low in Germany, I'm just not sure what happens if the conflict does escalate further. And despite the interdependencies that people talk about, they talked about that interdependency in terms of gas and other natural resources with Russia. I mean, all the energy experts in Central Eastern Europe, which is extremely dependent on Russian gas, and was probably more dependent than Germany was even, they were saying it's impossible to decouple from Russia. Impossible, right? Without a massive economic disaster unfolding. And we did it in a year, right? Weather helped, obviously, and probably won't help in the future, but I think, and you're seeing that with nuclear infrastructure, you're seeing that with telecoms infrastructure and others, that a lot of governments are changing course here. And I think for a reason.
There are dependencies that cannot be denied. You may remember the Huawei discussion we had in Germany 2 or 3 years ago with the G5 net, and there was no other provider than them. Jiří mentioned Nord Stream 2 and others, so I think everybody's aware of all these dependencies, and I think people feel increasingly uncomfortable. But if you do it or if you don't do it, that's a purely political question.
On this note, ladies and gentlemen, I'd like to thank our speaker, Thomas Richter, and his 2 co-panelists, Tilman Fechter and Jiří Król. Thank you so much for all your contributions and comments, but a special thanks to Thomas Richter for being here today and sharing all his thoughts with us. Please put your hands together to thank them.
You're welcome.